morning and welcome to the trade setup right here on BloombergQuint Live. I'm Niraj Shah. I'm just pulling up so that we can do this well. Okay. So of course, what the what the markets and the handover that we have. Remember, it's expiry day, so likely to be volatile as well. But keep in mind, I think the U.S. markets, what aided the US markets yesterday was this likelihood of a new spending bill, and as a result of which those markets ended marginally higher in trade, 0.5% or thereabouts. But this is uh, this is helping the markets at a point of time when the US-China tensions seemingly on the rise. Everybody now knows about the US consulate in the Chinese consulate in Houston being asked to shut down, and China promising that it will retaliate. Now, all of these are stressful points, but I think this new spending bill and support coming in from the Fed is keeping the US markets buoyant. So the markets didn't do all that badly yesterday. Frankly, there's a very interesting chart that we have on the Bloomberg terminal, which speaks about how, it just shows the tale of two halves, if you will, or how divergent moves are there between, gold and equities on one side and other asset classes on the other side. And it's quite interesting. Look at this. I mean, dollar is easing, uh, gold is rising, stocks are rising. It's just quite amazing the kind of negative correlation that we have since May, and arguably in account of the easy liquidity that is there out there. So, well, for now, follow the trend and make the trend your friend. So the handover from the US markets is not all that bad. Is Asia following suit, and is the SGX Nifty following suit? That's the question that we got to ask ourselves from a day trading perspective, isn't it? I mean, yes, the trend is positive, but what's happening today, considering it's an all important weekly expiry day for us as well. But yeah, Asia will come up on your screen, and then SGX Nifty will come up on your screen, and you'll see what I'm talking about. It's a mixed bag, if you will. HSI marginally positive. Kospi is kind of trading at the lows of the day right now. And if you look at the SGX Nifty, at least the last time I checked, was very listless, if you will. It wasn't as buoyant as you normally have. And I look at it, just lying absolutely flat and dormant, mildly choppy, if you will. So that could well be the trade setup for the day today, isn't it? I mean, the indices may just remain subdued due to this mixed global sentiments. Yes, there is central bank support that is talked about, but hey, the US-China tensions way, Microsoft earnings came out post-market hours, and the stock came off about a couple of percentage points post that, but the futures are flattish. So that's the limited thing. It's mixed global sentiments, and the weekly expiry-led volatility may keep the indices subdued. I think all eyes would be on developments around the US-China ties, and if indeed there is some retaliatory action, and if indeed this exacerbates into something bigger ahead of the elections, then that is something that people will keep an eye out for. I do think, as I said in the chart as well, that precious metals will remain in focus, but more importantly, even related stocks may continue to see action. Don't forget Muthoot Finance, Manappuram Finance, that entire bunch of names which are gold financing companies are doing really well. Silver is on a roll. I think 62,000 or thereabouts. It just had a really remarkable uptick in the last 1 month. It's outstripped gold by a margin. So I think all eyes would also be on the commodity trades out there, because hey, for a trader, any asset class that's worth its weight in gold, literally, if it is getting money. But um, just keep one thing, keep one thing in mind, viewers. We just got the news yesterday that Manipur is going to go on a complete lockdown for 14 days, starting 2 p.m. today. If all of these things happen, wherein uh, the rural India, second tier two, tier three India goes into lockdowns, then it may impact the sentiment and the sales for a lot of companies in India. So you have to bear that in mind. But what to watch out for today? I think aside of other stocks, Rosari Biotech, it will be a listed stock at 10 a.m. today. The IPO got some very heavy subscription, and therefore the listing and the post-listing performance would certainly be in focus. You will hear from the management at about 10 a.m. today on BloombergQuint, so keep an eye out for that. But stocks that will react at 9:15 today, I think one of them would be ICICI Securities. Revenues were up about 43% at 546 crores. Net profit up 69%. Active clients up 15% at about 1.5 million active clients. Um, about 80,000 clients were added in the current quarter. The total clients at now 4.9 million. That's a huge number. And the stock is trading at about 31 times. The broking revenue was the largest that they've seen. So think the I think the number performance was good, even though the margin performance was very, very weak. If anything, that will come and hit the stock, but otherwise, may do well. Rallis is the other one, following Dhanuka Agritech super performance. Rallis came out with a standout performance as well. To my mind, net profit was up about 52% at 91 crores. The expectations were about 83 crores, so that did well. Margins at 19.4% versus 15.2%. Again, the expectations were about 16.6. Now, the margins have improved due to lower raw material costs and other expenses. More importantly, the management expects that domestic demand to remain buoyant for crop care products and exports to gradually pick up as well. So do watch out for rallies. Yesterday it was Dhanuka Agritech's turn to do well. Today it could be rallies. I'm not saying it will emulate Dhanuka, but all I'm saying is that the numbers were good and some of these agri-related companies are doing really well. So do watch out for them. Um, Another number, Aztec Life Sciences. I don't track this company so closely, so can't really give a qualitative opinion out here, but the numbers look good because revenues were up about 45%. Net profit was at about 16 crores versus a net loss of 1.1 crores, and margins were at 25.2% versus 8.44. So performance seems stupendous. May react positively. Don't quite know about valuations or the outlook ahead, but yeah, the numbers are important and the numbers are written very good. So keep that in mind. Vodafone will be interesting to see how this one reacts because Bloomberg News reports that the Supreme Court has rejected a petition by the IT department which challenged the verdict of a refund of 833 crores. It's a small thing, but right now for Vodafone, any amount is a good amount, and this may react positively. Future retail, it's been choppy amidst all this news of Reliance and some of the other uh, interested parties wanting to pick up stake, but it's missed a payment due on dollar bonds yesterday. It's probably the first company or amongst the few companies which has done this, and therefore it's a negative development, but it's an active stock. You never know what it could do. So be careful if you're trading this one, but likely that it will see some reaction here. What stood out for me, and I didn't mention L&T's results on purpose. It was that big number that came out yesterday, and the numbers obviously left a bit to be desired. But I didn't mention them on purpose because they are better than estimates. But I don't think it means anything for L&T. How do you estimate what L&T did in the lockdown quarter? And therefore, I haven't mentioned about L&T's results performance, to be honest. But what I'm bringing out is the statement that stood out for me from SN Subramaniam of L&T. He's gone out and said that in our rough, I'm quoting him, in our rough estimate, capex of central, state, and PSUs of about 8 trillion cumulatively will come down to 4 trillion this year. Now that tells you a story because it's not just for L&T individually, it's for all capex related drives. If I mean, yes, it was known, but for L&T to come out and say that the capex number will halve tells you a story about what the order books of some of these companies could be like during the course of the next few quarters. Yes, you can save on margins, but margins will save the day. It will not save the year. For the year, the top line growth needs to happen. And it's clearly evident from what SN Subramaniam is saying that that is going to be the Achilles heel for L&T and some of the other companies as well. Now, unless export orders pick up for some companies, etc., it will be a problem. So be mindful of that if you're trading Larsen and Toubro today. Thanks so much for tuning into the trade, Sarah.